Hey, what's going on, traders? It's Chris at Verillo Trading. Today is November 23rd. It is Wednesday afternoon, and trading is done for me for the rest of the week for Thanksgiving. Pretty sure, at least. So, guys, if you're new here, my name is Chris. I own this channel, Verillo Trading, and we make videos about day trading, futures, swing trading, trading in general, platform tutorials, that kind of stuff, and creating custom indicators. So, feel free to check out this content if it's something you find interesting. Today, I'm going to share with you guys a trading disaster, something that happened to me that I consider to be a disaster in my trading. I had a bit of a sort of rough day. This is a disaster to my standards, and I have very high standards in trading, by the way, because I've been trading for a while. So it's not going to be any kind of crazy loss trade that you're going to see someone losing thousands and thousands of dollars on some kind of YOLO bullshit trade. So it's not going to be that, unfortunately. It's going to be software crashing due to custom code that was implemented in the software. And good thing is I found the problem already, so I solved it. But the trading day itself, the session from start to finish, was kind of frustrating. And I want to share with you guys how I managed to kind of get through it a little bit. And maybe this can help you, get through some of your emotions as you encounter them during your trading sessions, all right? So if you enjoyed this content, press the like button because it helps out the channel and YouTube algorithm. Even though there are people that have no idea what they're talking about that get 30,000 times more views than we do here, it doesn't matter. The least we can do is understand the YouTube algorithm is rigged, and that's the start of it. Okay. So on my screen, you're seeing my trading software recorded from the day here. You can see the time at the top of the screen, 8:39 in the morning. And I'm going to go back the session a little bit earlier here in a second. So the software I'm using is Sierra Chart. This is a rock solid trading software. If you talk to 100 people that use Sierra Chart, I would say probably 95 of them are going to tell you it's never crashed on them even once, unless they've used custom studies. Dun, dun, dun. So here we go. One last thing before we get the video started, guys, we do have a new Telegram group which you can join here. So there's a Telegram channel, which I linked to in the description. That's the link. So it's t.me/Verillo_trading, like this. This will be the link that you can follow to see our Telegram channel here. And at the same time, you can view the group and join the group. So there's a group where we can all chat and just talk about, random stuff regarding trading and send some of these really funny Telegram emojis that I love very much. Telegram's a great program, guys. And I want to get the group to 200 members so that way we can unlock the topics. So that way it can kind of be like Discord, except way better. So feel free to join, ask questions, and let's get on with the video. So this is how my session was today. So take a look. Today there was economic data that was coming out, and I was prepared to trade today. I did a good amount of preparation before this session, and it's always good to prepare yourself for sessions that are probably going to have some sort of an increase in price inefficiencies and volatility due to economic data being released. So the first economic data release we had here was 8:30 in the morning. Okay, so I'll fast forward it. Now look at this, 8:29:48. Take a look at the timer here, 10 seconds to go, and you can see the liquidity is thinning out. The average depth per price is thinning out, and basically there's no liquidity. 8:30 hits, boom, the software crashes. Goodbye, Sierra Chart. You can see the software on the right side has not crashed. You can see there's still charts running on the right side there. That's because that's coming from a separate installation of Sierra Chart, a second installation. I use 2 installations now, not instances anymore. So I fired up the software again. At the end of the day, it's not so bad. It's just one crash. I fired it up right away. It comes back, and we're good. So we'll fast forward to the first trade of the day. So this was the first trade of the day, was an attempt to go long on some sort of a breakout or momentum trade. I did take a 4-tick stop on this trade. And then a couple minutes later, there was a second attempt. You can see I have my client side condition there ready to execute the trade. And as the market approaches it, you will see the entry of this trade occur right here. The offer is now there at 17.25. It gets pulled. I'm one of the 49 that go through at the offer there. I hit it as it was almost gone, and then it's going bid, going offered, so that's okay. So I'm in the trade now for the second attempt, and this trade here did take a few minutes to play out. So we'll just fast forward this. You can see it kind of went in the money a few ticks, and then the market went almost to where my target would have been, which would have been around here, 1850s. And again, we're not going to explain the whole trading setup, but basically what happened was it went shy of the target a bit, came back, and the trade is still valid at this point. So actually what I did was I added another contract. Now I think that this add here, again, I've been playing with this lately. I think the ad was okay, but what I did was I ended up cutting that second ad as it went against me here, and it looked as though it wanted to continue holding the offer at 17.25 to 17s. So what happened was, as it tried to go bid and they tried to take offers at halves, they couldn't do it. It went back, offered over. I wasn't really impressed with what I was seeing, so I decided I wanted to cut that second contract off. So I joined the offer at 17s and I didn't get filled. What happened was we see this little run of 16.5. 16.5 was a pivot in this case. It was an important level, and you can see that my stop was actually below that level. You can see that the stop doesn't get triggered. We traded 16 halves, the bid stayed there at quarters, and then we went rebid. And then what happens is a couple seconds after that, you can see I have my cursor on the X there. I was like, all right, well, if we just saw a roll of that pivot, again, highly efficient marketplaces, normally if they roll these things to the tick, that's important information. I was about to pull that offer out, and what happened was I think it got filled in that instant. So a couple more went through at 16.5s. My offer is still there. I'm not pulling it because I'm not totally sure of what's going to happen. I'm in the queue here at 17. I get taken, right? So now I'm only long one. And you can see that they're starting to take offers at quarters right away. And just take a look at this. So it goes bid, and now look at halves, the way they trade. So it goes bid. There's a very weak bid, and they go bid at quarters and halves. And I had a limit order that I had placed. I wanted to add back the second contract that I just took off. And then I think I do end up placing another one at halves there. I do, as I see it go bid. Of course, I'm late. By that time it's bid, it's not going to be filled. So we'll see what happens. And you can see that it's going bid, and it's doing that thing where it's gone. The train is gone at this point. I mean, I can clearly see that. Once it's doing that type of activity where it might backtick a couple of contracts, you'll see a really weak bid, and then it'll go bid 2 more ticks higher or 2 more ticks lower if it's downtrending. It's gone at that point. Don't even try and chase it. It's gone. You missed the train. I was thinking to myself, the way that I would have done this was I had to put my buy stop entry back. My client-side condition entry had to be placed back. If I would have been filled on my offer at 17 there, the way it filled it, and then it came back and went bid at 17 quarter, 17 half, I had to have my client-side condition there ready to try and hit that offer as it was going away at 17 half, and I probably would have been filled again to re-enter that second contract on that little move. Again, little nuances can go a long way in trading. So we did get filled in the target there, and whatever, pretty much a break-even trade, with the first attempt and then that. So, at the end of the day, we're flat after that. There was a couple of losing trades here, which I don't really need to go over, but basically I was looking for a reclaim on the short side, and they kept taking the offers. I just took a small loss there. And then I ended up going for a similar type of trade on the 10-year. And what you'll see here is I went short there at 19.5. Okay, and now you can see I have my client side stop there at 21. And I'm looking at the trade, and the trade's nothing special. I gave it a few ticks of breathing room, but really, it didn't really want to pan out. So what ended up happening was the software crashed. Right as soon as I was about to be stopped on my client side stop there at 21. Then what happened was I fired it back up, and we'll just go back to that moment. So what happened was I fired the software back up. I'm looking at this trade. Of course, my client-side stop is no longer there because it was a client-side condition. And I am looking at this now, at this very moment right here. And I'm very precise with my trading, guys, to the point where I know very well that if I would have been stopped on this trade, I definitely don't want to be in the trade anymore. I definitely do not want to be in the trade if my stop wasn't triggered and I'm still in the trade, if it's trading 21 bid and 21 half offer. I do not want to be in that trade. So I'm looking at the trade now after I fired up my software again, and you can see that I have a limit order I want to buy to get out, right? I want to get out of this short trade. I'm short one contract here. I want to take a loss. I want to get out at 21. So I have a bid there. Now, if we look very closely, you can see on the order book here, 11% of the orders here out of this 300 lot bid, 11% of all of the orders are above the average lot size. So out of all of the orders here, there's an average order size that I'm getting, and only 11% of the orders in the market by order data feed, which consists of most of the orders except for 1 and 2 lots, only 11% of those orders are above the average lot size. So that means that there's not a high percentage of orders, of big orders on this bid. There's a lot of small orders on this bid. And there's also small orders on this offer here. And what I was seeing here is that the market didn't want to trade with those small traders at 21. It just didn't want to. And you'll see it fluctuating. So it's a bid that consists of around 5 lot orders. And you can see it's not trading. It trades 51 contracts. And I'm looking at this. I give it a couple more seconds. It trades offer. And you can see that I'm contemplating moving the order there to hit the offer at 21.5 to get out. You can see the bid is still consisting of small orders. And then I ended up hitting the offer to get out. So I moved the order up and I hit the offer to get out at 21.5 because it just really didn't look like I didn't know if they were going to come back and trade them. I mean, they already were there. I mean, they're clearly there. The traders that want to trade at 21, the small lot traders, most of them were small lot traders. The market didn't want to trade there. And we do have a reclaim on the upside. And I'm in a short trade that I should have been stopped out of. So disciplined me gets out of the fucking trade. So good for you, right? Good for you to get out. Definitely fine. Perfect. So now what we're going to do is look at the last couple trades here. There's one last trade in the session that actually made up for all the nonsense that you saw right there. And we'll go ahead and get that trade now. 9:45, there was also news that was hitting the market. So 9:45, you can see again, the liquidity is thinning up. Take a look at this. You can see again, liquidity nice and thin on the book there right before a news announcement. The treasuries do this a lot right before economic data. Well, they always do it pretty much. And we're going to watch this occur. So we're going to have 9:45 data come out here in 5 seconds. 4, 3, 2, 1. 9:45, trading locked, software crashes. So again, it's due to the same thing. And I'm going to tell you what the problem was at the end of it, because I did figure it out. So I fired the software back up, blah, blah, blah. And then I didn't really do anything after that, except I was trying to troubleshoot my code and just think about what could be causing this problem. But there was actually a trade. Now, take a look at this. This was a trade where I actually put an order in, and oh my God, guys, it doesn't get better. It only gets worse. Take a look at this. So the market's trading up here at 27.75, and pretty much it's long biased. I'm not looking to go short on this. I'm actually looking to go long on a pullback because there's no big reclaims to the downside in this area. So it was actually a pretty green light for a pullback if we were to get one. And so I have my order there. I placed the live order there at 26.25. You can see the stops down there at 25.5, and then the software crashes. So I had an order in the market, and it crashed. So what I did in this moment is I actually opened up the mobile app, the web trading panel of the Teton order routing service on my phone, and I canceled the order off. And it took about 4 seconds or 3 seconds to do so. So if you use the Teton order routing service, guys, definitely you want to get used to logging into that web portal every single morning. It's very useful, and it can get you out of this type of situation. All right, so look at what this happened. So this is actually the move I was looking for. So you can see the move happened. It stopped around 25.75. My order was at 26.25. My stop would have been at 25.25 in that case, roughly around that area. 25.75 was a reclaim on the downside, and it bottom ticked it. Perfect auction, bottom ticked right to the level and bounced. So that's really good. It would have been a great trade. And the target would have been basically right here, 27.50 to 27.75 at the absolute most, I think. And you can see that it did go there, and that would have been the trade right there. That would have been that mean revert trade on the long side. And of course, I didn't get it due to a software crash. And I think that was the last one for the session, but then there was one more trade, again, the last trade of the session here that I want to show you guys that made up for everything. So again, watching the market, I was definitely frustrated. So I want to talk about this for a minute. So the frustration was pretty big in this moment. And of course, you'll get better at this over time, guys. I would encourage you guys to watch various videos about meditation, about potentially, the ones I've been watching lately are like Buddhist monks talking about meditation and different practices that they do and how they deal with emotions and temptation and things like this. And it's interesting how they describe it, and it's also very calming to listen to them. So I think that some of these things can be transferred into an activity like trading, a high-level performance activity that you have to have a good degree of awareness for your emotional buildups. So I was simply just repeating it to myself. I was just saying frustration. I'm feeling frustration right now. And just saying it in a very calm way and taking deep breaths and just, acknowledging an awareness for the emotion that I'm feeling due to things that are out of my control, okay? This is going to take time, guys. Most of you are not going to be very good at this at first, and everybody's battling this constantly, even guys who are very experienced. So, take your time with it. Eventually things played out. We saw a bit of a reclaim to the downside here. There was resistance at 28.25. We moved up high for a big stop run. And now what we saw is the market is reclaiming to the downside, and it did move up, top ticked that resistance. They kept reloading the offer, and they went down from there. And after this, I think it opened up a pretty good opportunity for a pullback on the sell side. So I was looking for that. And there might have been more than one opportunity. I only capitalized on one of them. And it was this one right here. So as the market is trading down here at 26.25, volatility is around 3.5 ticks a piece. And if you're looking to sell a pullback, This is a decent area because the reclaim's up here 28.25 and my pullback area is here. So if I'm going to be stopped out of the trade, I'm going to be damn well sure it's going to be in an area where there is a reclaim. So if I'm stopped out of that, I know that's probably an area that the market shouldn't be going if we're pulling back here on a one-time pullback. Anyways, sorry I don't go in extreme detail about the trade setups, guys. I know that's not really part of what these videos are about. You can kind of see it. Guys who are experienced, you can see pretty much what I'm doing. So you see my orders are there. I have 2 sell orders there. I want to go short on a pullback. Then the market starts to move up, and I'm looking at this. I zoomed out to look at the bigger picture, and the market was moving up pretty quickly here. They're taking the offers or they're pulling them out. You can see they trade them at 27, and I think I'll be filled here at 27.25, and I'm filled right there on the offer at 27.25. Okay, so that my first offer is filled. I move the target to pretty much where I think I'm playing for, which is around a 4 or 5 tick rotation in this case. For basically a mean reversion scalp. That's pretty much all I was looking for this trade. That's all I think that it had to pretty much offer for the most part. So I actually got filled in the second lot too. It snapped back a couple ticks and then it snapped up to 27.5. And I guess we can watch that. Let's watch the whole trade play out from start to finish. So there they go bid, they take it bid. I get filled in the offer, only a couple go through, it goes re-offered there, 27.5. Pretty much for me, the upper end of that range, it goes offered over. And we're offered over at 27.25. We're trying to go offered at 27s. Now we'll watch how this trades for a minute here. Small offer at quarters. Now no trading goes through. You can see I have both my targets down there at 26.25. Offered over at quarters, offered over at evens. Now trying to go offered at sevens. So they're taking offers at 26.75 here. Yeah, so it went offered over, and now it's trading at 26.75. We have small offers at 27, if you saw that very briefly. And now again, we have small offers here at 6.75. And at that point, it's too late. So it goes for it. And that's pretty much how these markets work. I think that, again, being very precise with trade management is kind of tough in these markets because they're so highly efficient. So I would say the majority of the time, you're going to probably just let the trade play out. And only in some circumstances you can try to potentially scalp it or manage it in a more precise way. But in those cases, I think most of the time you're going to be over managing it. Again, I think it's very hard to manage trades very precisely. Like, for example, if you watch sometimes how Fat Cat manages his trades, trading the ES. If you guys don't know Fat Cat, check out his YouTube channel. He trades the S&P 500 futures. If you watch his style of trade management, it is very precise, and sometimes you can get in and out of trades very quickly and fight for a certain trade entry. I don't think you can do that as well in treasuries because they're so efficient. By the time the market is going, you're most probably not going to get the fill. Unless it's a session where there's a lot of back and forth and more inefficiencies. But when the market is more efficient, by the time the market is moving, it's gone. You're not going to even get out for a 1 tick or 2 tick loss. It's going to go straight for your stop. It's going to go straight for your target most of the time. But again, that's something, what I'm saying is something that's relevant to market conditions. So yeah, that's what I got to say. This was the last trade of the day for that day, guys. And then I figured out what the problem was. Probably you guys want to know what the problem was. So it was in my code for this study here, which is what I call the average lot size version 2, which uses market by order data as well as number of orders, which comes from the regular data feed. And what was happening is, in order to get some of these calculations, I'm doing some divisions. And what I realized was that there is the potential for a division by zero. So that's what was happening, guys. There was a division by zero occurring in my calculation where for very brief moments when there could be very volatile shifts in the price, or when a chart book is opened after being closed, some of these values, the value for the number of orders field in the data feed was zero. And basically there was a division by zero that was occurring, which caused, I guess, a software instability, and basically the software would blow up and crash. And I'm pretty much like 95% sure that that's what it was, because I actually figured out how to replicate the issue. And if you guys ever run into this, maybe this could help you. If you have a division by zero in your code where one of the values are zero for even a very brief moment, and in this case, this was the method that was able to reproduce the crashing immediately, which was closing the chart book and then reopening it right away. Reopening it caused a crash immediately every single time. And I removed the study off the chart, do the same thing, and then no more crashing. So that pretty much told me that that was the study that was causing the crash. That was the first thing. And then I spent some time looking through the code and I just wasn't quite sure what it was. And then I read through Sierra's documentation about causing instabilities due to custom studies. And one of them was a division by 0. And then lo and behold, there's divisions right in front of my face. I put in a check that says if the value is not equal to 0, don't do the calculation. And then lo and behold, the crashing is gone when I close and reopen the chart book. So I'm pretty sure that solved the issue. All right, guys, rock on. Thank you for watching. Take care.